Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, April the 17th. The year's 2025. Let's talk trading. Okay with losing some of the time. These videos are for educational purposes only. Your results may differ from mine. And speaking about being okay with losing, you have to have risk management in place. That way, when you lose, you don't lose more than you're willing to lose in a single trade or a single session, because that's what you're okay losing. And I was thinking if I should just call this video what I called it. I was thinking maybe I should start a whole series called The Hardest Thing in Trading, The Hardest Things in Trading, because being okay with losing is one of the hardest things in trading. And one of the reasons is because it's money. And when it comes to money, people are funny. Some are funnier than others, but it's just something it's a real psychological um, situation when we deal with money. And before I forget it, I'm going to jump off topic just for a second. Yesterday, um, I talked about my price action score and price action and the state. And I think it was back in 2021 when I did the state bars. But I guess Larry Elders had done something that preceded me along those same lines. He identified the four states. He was doing it in stocks, and since I hadn't really been doing stocks, over the past decade or so, almost 2 decades now that I think about it, I wasn't familiar with his work. So just in case somebody thinks I'm trying to steal his stuff or rebrand it, that's not the case. I stumbled upon it on my own because I have a systems background, and I was just looking at things logically. Um, so and I, I guess he also had something where you have those four states, but you can either have a bear bar or a bull bar. So he says that there's actually eight different states. Um, and then he goes on. He did some statistics, which is something that I like to do, as you traders probably know if you've been watching my videos. Um, so I guess there's a video out there about it. So if I might do another state change video, and you could probably look it up. But anyway, so back to the topic about losing. Um, the thing is that you know the casinos don't win every time somebody bets against them. You know, the house is rigged in the casino's favor, and they win big time. It's just a small percentage. So, and that's what we try to do in trading. In fact, I think there's a video or two where it's like, create your own casino or be your own casino. Because if you have a method that works on a particular pair or a particular stock, then that's when I used to say always just go milk the cows. And I tell people, and Walmart's been trading a pound for probably decades. That's all he trades is the pound, you know. And for years, all I traded was the yen. And then when I started trading with Walmart, it's like I don't care. I switched over. So, back in the day, I didn't like the pound and I didn't like the yen just because of the way they moved. But the thing is, once you can identify how they move, you can use that to your advantage. And that's the one thing about losing. Um, should be equated to a lesson. When you lose, you should look for the lesson so you don't make that quote unquote mistake again. But sometimes in the market, you know, that just happens to be the luck of the draw. And that's why you have your stop loss in place so you don't lose more than you're willing to lose. And, but it's just, I'm not going to sugarcoat it. I'm not going to lie to you. It is difficult to be okay with the loss. And another reason why it's difficult is how many times has price hit your stop, like to the point, turned around, and then, went the other way for 100 pips. And, maybe you lost 20 pips on the trade or something. And you're just, it's like, oh man. I mean, how many times has that happened to me? It's like, if I would have just waited an hour, well, that's one of those things where you go, okay, well, then just wait an hour. So, for example, if I would have said, you know what, I want to go short here. I got a couple of these, so I want to take this short. It's like, no, let's wait for an hour. Well, you see, if I waited, I would have avoided the loss. And so that way, maybe what you can do, it's not, not necessarily paper trading, but you just take a day and just observe the market and say, okay, this is where I would enter market on the chart, and then just see what happened. And then you just do that for a day. Maybe, I don't know how many trades you normally would take in a day, but just do that and just see what would happen. Because by not actually placing a trade, you're not placing any risk. So you'll probably um, follow your method without hesitation, without second guessing, and then you can just see what happens. But as soon as you say, oh, now I'm going to start, $1 a pip or $10 a pip or $5 a pip, whatever it is you're trading, a dime a pip, doesn't matter. Once you actually have the money on the line, that's when the psychology really kicks in, and you should be able to see what your mind is doing, because you'll go, I was going to take that trade, but I don't like the way things are looking, or you hesitate. And then it's like, dang it, if I would have taken that trade, I would have made 5 pips or 10 pips or whatever. And so, you see here, and once again, it's like, oh, maybe I take that trade. But see this green background? I know if I were to take this trade, I better, if it take only moves a pip and starts coming back, I better just get out, because chances are this is what's going to happen. And so, like right here, this was red, but you see here it put in this bottom and reverse. It's like, no, I got to get out. And so right here, you can see these red stripes. What's it doing? It's making higher highs. Look at these blue stripes. What's it doing? It's making higher lows. So you might want to be careful. But see here, if you're taking that trade after that second one, it's like, okay, maybe you'll take the chance and you get it. And in that case, you would have gotten some nice pips. But price also happens to be in the launch pad. And I kind of know I don't like the short in the launch pad. Now, especially if the day is green. Because usually if the day is green and it gets in the launch pad, it's going to launch to 60. And in fact, if I'm not mistaken, let's see. This is today. It hasn't quite launched to 60. But you see here, it made new highs. We had news about an hour ago. And we're also at the psychological 50. We just put in a red stripe on the H1, which is also a brand new H4. So we're just going to have to wait and see how this plays out. But with only 53 pips of range, we know the sucker's been ranging a lot more. Had unemployment news come out, and it was actually, thought it was a good number, but the market reacts how the market reacts. It's just something you have to understand, and that's why I used to always say, I read it somewhere. It's not my original. It's like, I don't care what the news is. I only care about how the market's reacting to the news. So that's why I don't even like to look at the numbers till later, because I don't want it to affect my trading. Because if I think, oh, good news, it's going to go up, or oh, bad news, it's going to go down. It's like, no, I don't want to be affected. I just want to watch the chart and see what happens. So you see here, even on this move here, we still having higher lows. See, that didn't quite get to the bottom of there. So that's just one of those things that just learn to be cautious. Because once again, you're at the psychological 50, you're at the H4 open, H1 open, M30 open, etc. on the way down. And, you know, you just want to be careful there. So, I guess the corollary or to, losing, you have to be happy with small wins too. Because what will happen is, if say you took 2 pips and it ran for another 8, you could have had 10 pips. Then you might try and get greedy. And what will happen? Oh, what did I just say? Something about the launch pad and going to 60. um, you'll want to get greedy, and then you get burned the next time around. And you can see here, price is stalling once again. And if you take a look at the price action score, you see we came down here. And notice here, we had a red stripe, but we still had a green price action score. So it was saying up, up, up. Finally, it moved down. And then here we had a bull bar or white bar, but we had a negative price action score, mainly because we were below the midpoint. You can pretty much assume if you're below the midpoint, you're going to probably have a negative price action score. Because the midpoint, you either add one or subtract one. So you can see here we made some making moves up. And once again, if you look at this, you can usually see when price changes color, it's usually going to move, 3, 4, sometimes only twice, but usually most of these are 3 or more. I haven't run any statistics on it. I think I'm going to have to run a little frequency distribution and see how many times you get the scores appear. And that won't be hard to do. And I think it should be interesting. But I guess really I need to run 2 frequency distributions. I need to run one on the actual score, and then I need to run, how many greens in a row versus how many reds in a row. And I can change, I think I've got a candle color in a row. I can switch, put the price action score code in there. So that should be really interesting, because that might even be more telling than the actual score. So I'd probably make it look just like the candle color. I'd use that and, have this type of score, because I don't think we're going to have 10 or more. Never know. It just might happen. Maybe on the larger time frames. So, fellow traders, you know what? The fastest 15 minutes in trading is over. And I'd like to know if there's a part to losing, or what you think the hardest thing in trading is, or what you think so hard about losing. And so I can expand on that topic, because I think it's important. Because if you can master that, master yourself, then you could probably make sure you wind up on the profitable side. Because I want you to always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One.